welcome back to the Sovereign Economist for this December 15th, 2010. You're listening to us here on the Liberty and Freedom Radio Network. And as always, at this time of the week, or at this time of the show, I should say, and at this time of the week, we are joined by our special guest and good friend, Bob Chapman of the International Forecaster. Welcome to the show, Bob. Thanks for coming, and how are you today?
Well, thank you again, and I can't hear you very well. You're very low key.
Well, I'm dialed down a little bit. It's just after a while the stuff kind of wears on you. But we're getting close to the holiday season, and people's blood pressure and all that kind of stuff's been spooled up all year. And even though Congress and world events are picking up the pace, the truth is we settle in for the long haul, and I think for me it's partly about pacing. So I hope you can hear me a little better now.
Yes, I can.
I'll put myself a little closer to the microphone for sure. Well, Bob, there's so many big stories to start with. I noticed that bonds are getting hammered this week, and yet the stock market really isn't falling off that much. Gold is kind of pulling back and basing, and it seems to me that the government's sort of in high gear trying to keep a lid on a pressure cooker that what they don't know is that there is probably a nuclear bomb prepared to go off inside that not only is going to blow the lid off of it, it is going to simply launch them into some form of oblivion. But it certainly, to me, feels as if for as calm as things seem to be in our markets in terms of price moves and volatility, with the single exception of the bond market, I just have a feeling that it's the Goliath of the government versus the Goliath of the markets. The market's going to win out, and when it does, this basing period is going to explode into a heck of an interesting time. What's your take on that situation?
Well, I covered that in today's issue of the International Forecaster. I believe that the market is overpriced by about a third, and if I'm correct, the Dow could go to 8,000, in the next 6 months. Probably will start giving up ground after the first of the year. Probably on a net basis, about 65 to 70% of the experts, the economists and analysts, et cetera, I think the market's going up, and that is an extraordinarily high figure. And usually what you do is you do the opposite of what the herd is doing. And the herd keeps on buying. And I think the herd's going to have a problem. And that problem is going to be that there's too many people who think the same way that they do. And I think the market will sell off during the first 6 months of the year. I think 8,000 is a reasonable objective on the Dow. The bond bubble has broken. Quite frankly, I thought it would last longer, but the Fed really had some serious problems in that market, which is about 50 times bigger than the stock market. And that problem is that a lot of people are very unhappy with the quantitative easing too. But, I asked them, are you ready for a deflationary depression? Can you handle 10 years of virtual no growth, 50% unemployment, demonstrations in the streets, perhaps revolution? No, I don't agree with the Fed. I don't agree with the people who own the Fed or control the Fed, because they're the enemy, and they caused all this. But you have to be practical as well. And I think that quantitative easing, too, is only going to buy time, but 70% of the American public wants the Fed to buy time because they do not want to face the music. And so with that said, we will go a year up until the end of the next September, and we will find that there is going to be a increase of inflation. They won't admit to it. They'll probably admit, the government, to 5.5% or so. And inflation will be over 14%. It's already between 6 and 7% now. And they lie about everything. Even Jimmy Rogers is catching on to that.
Yeah.
And so with that said, the market's got a problem. Bonds have got a problem. We just saw in about 5 weeks the U.S. 10-year note go from a yield of 2.50%, to 3.50. Now, it is very unusual that the bond market yield or the fall in the bonds themselves, because there's a reverse reaction. When yields go up, bonds go down. And so I think that the rates are probably going to edge higher. What are we looking for? I think 4 to 4.5% on the 10-year, and that's conservative, believe me. And now they're talking more about the 30-year, because the 10-year has been disastrous for mortgage rates, because that's where they get them from. Yep. And we're looking at 6 to 6.5% on the 30-year. I think the Fed has allowed this because people are saying, look, we're not going to buy this paper unless you raise the rates. And so they backed off. Now, if you've noticed, the short rates have held relatively the same. They've changed, but not considerably. And so I think that over the next year, I think that you can look for those numbers, and that creates a real problem. We had a 484 today for the week on the 30-year fixed rate mortgage coming from Fannie and Freddie. And I think bank rate will probably be about 10 BPS higher, or around 494. That's up from 416 maybe 3 weeks ago, maybe 4. That's probably quite a jump. That means there's a lot of people out there who are not going to be refining because of the higher rate. And there's a lot of people out there who are not going to qualify for anything, much less to purchase a home. And then I see these idiots who own these home building companies building between 500 and 600,000 homes a year, when inventory that's sitting on the sidelines is 3.1 years of inventory. Let me tell you what's normal. 4 to 5 months.
That's right.
So I think there's a lot of inventory. It's not going to go away. You get idiots building houses, and they're all going to go bankrupt unless the government steps in and saves 2 or 3 of them, and they're going to be nationalized, because that's what they're up to. And so housing is going to get down another 20% over the next year or 2, and if that is the bottom in 2012, and I predicted that, 5 years ago, and if that is the bottom, then we'll go sideways on the bottom and bump along for a minimum of 8 years. Maybe as long as 30 or 40, for all I know. We won't know until we get there. In the meantime, commodities are going to continue to accumulate in value, and gold and silver are going to continue to go up. And the public in the United States really doesn't have a clue. Still, less than 1%, maybe 2% of all Americans own gold and silver or shares. In Europe, they're buying hand over fist. In Asia, they've gone bonkers. India is always a buyer. And then we have the Middle East, and they're very big buyers as well. And so this is not going to get down. you're going to see the United States government in the market manipulating it. It'll last 3, 4, 5 days. It'll be over because they don't want to sell any gold. So they're doing it with derivatives and futures. I know you've seen it happen over the last year, over and over and over and over again. And that is, they can't hold the market down. So, gold and silver are going to continue to go higher. And when you see dips, you become a buyer. Bullion, coins, shares. Combination of all, or whatever suits your fancy, whatever is suitable for you. But you do not want to be in the general stock market, except for gold and silver shares, and that includes oil shares as well. I like them, but if oil goes up and the market goes down, the shares ain't going anywhere.
That's right.
I've been doing this for over 50 years. I know.
Well, you know, Bob.
And so the only safe place for you is to be in gold and silver related assets.
Yeah, and the thing that's interesting, you know, the thing that's interesting about the gold and silver is that you've now got people coming out once again and calling a top and gold's in a bubble and here's where it rolls over. Let me see. For the last, 7 or 8 days, it took a spike up to 1430 and then pulled back and has been trading nicely in technical support range here in the 1370 to 1395 range. To me, this spacing is healthy because does it not shake out the weak hands, the people that are in there for the short-term trade, and basically allow the gold to transfer into strong hands, the people who are investing, because they understand why it is so important to be in it. Yes, we have a manipulated market, and by rights it should be double what it is or close to it, and that's just on the government's lying inflation numbers, or over 7,000 or 7,700, as you and John Williams have said. But I look at it this way. For that small percentage of America that, that is invested in gold right now, the rest of you have a marvelous opportunity, courtesy of your U.S. government and the short sellers, to get in at what you will look at 6 to 9 months from now as being a bargain price. You have to understand, folks, they can't keep this lid on there. And the fact that that gold is not rolling over and falling back down should tell you something. And it's rather fascinating, and I really kind of look at this and I go, pretty amazing.
Well, I think you're right, and the opportunity in gold and silver in particular, because it can be approached and breached and bought by anybody. You don't have to have lots of special talents to do that. The coins are pretty simple, as is bullion. Stocks are a little bit different, but that's why in the International Forecaster, we recommend stocks for people and get them brokers. And I might say that we never receive anything from anybody for anything. The exception is those who subscribe to the International Forecaster. And so we help people. And we help them big time. And we've had thousands and thousands of letters to that effect. And I'm sure that it's going to continue that way. One of the things you alluded to was the people who have publications, newsletters, and also the analysts and the economists of the big firms and banks. They're perennially telling people, well, it's a craze, it's a bubble, and technically it's going to correct. Well, I get news for you. For the last 5 years, every one of them's been wrong. And how they keep their subscriber base, I'll never know. And I do know that they all have serious problems with their subscriber base. Well, and we put on $500 a month.
Bob, the correlation...
And we don't advertise.
Yeah, well, Bob, the correlation between the 1 to 2% of the American people who are in gold and the subscriber base makes sense if you stop and think about it. I'm reminded of, and this was actually on Jim Sinclair's Mindset here a couple of days ago. How many of you all remember Monty Python and the Holy Grail? Jim writes that, well, for those that do gold, for those that do remember it, gold looks like King Arthur at dawn in Africa. The knight whose duty it was to protect the bridge from the other knights crossing encounter a determined King Arthur. King Arthur approaches the bridge and is challenged by the bridge keeper to halt and do not cross. A fight ensues, and the knight protecting the bridge is reduced to a slaughtered stump with no arms and legs. King Arthur crosses while the bridge keeper yells at him to return as the bridge keeper threatens to bite the king to death, as he no longer has arms, legs, or weapons to fight with. The shorts in all things gold represent the bridge keeper. Of course, the gold guys are King Arthur. And I love it. When I read that, I just fell out of my chair laughing because it is so true. And for anybody who does remember that, you will understand the futility of the shorts trying to hold this, move to the real reserve currency of the world back. It ain't going to happen, folks. So this is still a buying opportunity, whether you believe it or not, whether you buy what they're telling you on the, CNBC and all the rest of that stuff. Time will tell. And we've been telling you this. Bob's been telling you this since, $300 or less, I guess. And I've been on board since I've been doing this radio show. And when I started, I think we were still sub 1,000, about 900 and something. So here we are at 1,400. We've been right so far. Trust us, we know what we're talking about. The only thing that will change your outlook on gold and cause you to question it is whether you ever come to a point where you believe that the United States government, Fed Bernanke, and Obama come out and make public statements. We're sorry, we've led this country astray. We know that we've tried to destroy you. We understand we're, could be charged with treason, but we're going to stand down. We're going to give the people their republic back, and we're going to do everything we can to stabilize our economy. And the way we do that is we're tendering our resignations immediately. Until then, gold is a buy. And that's about all
It'll be a buy long after they attempt to step down.
Yeah, that's true.
They're not going to be given the opportunity this time around to do what they've done before. Too many people throughout the world know what's up.
Yes, they do.
I've done numerous radio programs and television and been interviewed by the major newspapers in Greece, France, Germany, England, Ireland. And I told the people, default, get out of the euro, cut your spending by 1/3 and increase your taxation by 1/3 over a 5-year period. You will have a 5-year depression, and you're lucky. If you take the bailout money, which is really to bail out the banks, you'll be in depression for the next 50 years.
That's right.
Anyway, that's what it amounts to, and that's why you're seeing rioting in Greece, in Ireland, in Italy, and France, because they're listening to what I have to say. It's not only me, it's other people as well. And, Greece is the tip of the iceberg. They're trying to make an example out of them. The man who runs the country, Papandreou, is a member of the Bilderberger Group, and he's an illuminist. It's one of the reasons they pick Greece. The Greeks have to overthrow their government. That's what they have to do. And the Irish have to do the same thing, hopefully, legally, and quietly. If that doesn't work, anyway. And that's the only thing that's going to be solved. And what you're seeing in Europe right now is the beginning of what you're going to see in Europe. It's going to get worse and worse and worse until Greece and Ireland, then Portugal, Belgium, Spain, Italy, they're all going to go under. There's no way out for them. They can't continue. And it's terminal. In England, you've never seen riots like you've just seen. They're by young people who've been told they have to pay 3 times as much to go to a university. These are the people who will lead the country in the years to come. And they're looking at this dork, Prince Charles, who I happen to know. They attacked his car. That is an enormous precedent.
Yes.
They're looking at the black nobility, the royal family, with trillions of pounds of assets, telling old people they got to starve to death, telling students they can't go to school because they can't afford it. You've got to be kidding me. They have to be suicidal. But this is not 5 or 10 or 50 years ago. We've got talk radio, programs like that reach all over the world. We've got the internet. And I'm telling you, the game is over for the bad guys. It's just a question of how is it going to work on the way down. And if these people think they're going to get away with what they've done, they're crazy. And there's no way for them to hide.
You know, it's fascinating, Bob. People in this country, our government has to be looking at what's happening in Greece and what's happening in Italy. Mind you, that the people, what was it, earlier this week, or was it late last week, that Berlusconi survived a confidence vote by only a few votes, and the people were so upset that that's what triggered the rioting in Italy?
He just bought them off. It's the same thing that's going on in every Western government.
My point exactly.
Germany, Merkel and her tribe are terrified.
Yep.
Germany will give no more money after the contribution that reaches $2 trillion.
Yeah.
They're not going to give any more money. The game's over.
Yep. And my point...
And, I want to tell you something. They really don't want to screw with the Germans.
No,
because
they
if they get mad, everybody's got a problem.
That's right. That's right. Well,
I lived there for 5 years. I speak German. I lived in Switzerland. And I know the people. I lived in France. I lived in Italy. I lived in Spain. I lived in Portugal. I lived in London and Copenhagen. So I know how people think. I speak their languages. You get on the streetcar or the bus, and people are talking next to you, and they look and say, "Wow, that's an American, so he doesn't know what the heck we're talking about."
Yep.
And so they just talk right along, and you just sit there and listen to their conversation. It's funny. It happened to me in New York one time. I was on the Underground, and I was sitting down, and there were 2 women who were standing above me who were talking and speaking to each other in German. And they were talking about the night before.
Yep. And
what a great time they had. And so my stop came up, which happened to be Times Square. I was on the 7th Avenue IRT. And I went to get off, and I turned and smiled up, and they said in German, "I'm glad you had a nice evening." And they about freaked out. So you never know nowadays who speaks your language and who doesn't.
That's true. Well, we got to get out on a break, but one last point I want to make. My point about Berlusconi and his just eking through and the people rioting should tell you something, and that is that the people do not support the manipulations that are going on in government to keep the entrenched in power. And there is a perfect example of that situation. Let me tell you something. You think that can't happen in America? Despite American Idol, Dancing with the Stars, and the other things that I say about that whole comparo, at some point, the Americans aren't going to be able to pay their power bills so that they can sit and watch these shows. They're going to be out on their own. They're going to be bored, and they're going to say, you know what? This stinks. They're going to look up. They're going to see how their politicians and how their leaders basically sold them out for their own personal gain, and we'll have the same thing going on in the United States. Let me tell you something. No matter what this government does, they cannot put down human nature. We may be very tolerant, and we may be very, very patient. But when it runs out, you think the Germans will fight back. The Americans will too, even if they are only doing so to feed themselves. We'll be back after this. You're listening to The Sovereign Economist here on the Liberty and Freedom Radio Network. Welcome back to The Sovereign Economist here on the Liberty and Freedom Radio Network for this, the 15th day of December 2010. And we're rejoined by our special guest and good friend, Bob Chapman. Bob, welcome back.
I'm ready to go.
And it would help if I turn up your mic. So anyway, we were talking a little bit off the break about the issue with the 401ks and the IRAs, and the fact that American taxpayers are a rather plump, what shall we call it, cow to be, or a sheep to be shorn, or whatever. Given the amount of money that is in private pensions and 401ks, you know darn well that the government, the Fox, definitely has its eye on it. You've seen precedents of these funds being nationalized, for lack of a better word, in other countries. And trust me, it's on its way here. Bob, can you talk a little bit about that for people who are still on the fence, still do not believe, or otherwise cannot imagine that their government could be what their government is?
Well, first of all, whether you like it or not, your government is going to try to relieve you of your retirement plans. And they're going to do that by legislation, if possible. And if they can't do it that way, they'll use executive order. And they're going to tell you that they're going to give you a government-guaranteed annuity. And that annuity is probably not worth the paper it's written on, because the government's broke. But they want that $6 trillion in the IRAs and the 401ks. And so, with that said, what kind of precedent is there for that? Well, 2 years ago, we had Argentina commandeer retirement plans. And just recently we had Hungary, and last week we had the Parliament in France. They voted to start to relieve the retirement plans of public employees in France so that they could balance their budget. And of course what they're going to do is loot it and never pay it back. So there's plenty of precedents, and there's others in the past. The move in 1994 against the British citizen that cost him $578 billion. They changed the rules. It was dreadful what happened. And so you can trust government to do what they shouldn't do. And that's the way this is headed. And the legislation is all made up. They wanted to try to run it through in this lame duck session, but they had so much trouble getting this FDA thing passed, and then the extension of the Bush tax benefits, as well as increasing those benefits and adding all kinds of terrible junk to the bill in order to get it passed. And it's going to cost close to $900 billion for the American taxpayer, and that money is going to be used as stimulus. But and that's going to add up, including the Fed, to $2.5 trillion, which will take the economy sideways for a year and give us 2% GDP growth. when otherwise it would have been 1%. And that's down from 3% in QE1. And so they need the money. And not only that, they want to financially disembowel the public. It's being done deliberately. So all of you people who have IRAs and 401ks, they're going to come after them. And the Roths, I don't know, because the taxes in the Roths have been paid. What I think they'll do is relieve them of their tax shelter, and there will no longer be any reason to have them. But they're going to go after the other two. And if you don't start moving your money out, you're going to lose it.
It's about as simple as that, folks. The government gets its tentacles into everything that looks like it has any value to them. They don't care about you, and they surely don't care about you keeping your money. The notion that they could take your money and give you an annuity in treasuries, which, as we have talked about all day on this show, are headed toward, I'm sorry, sooner or later, worthless. Probably about the time you're ready to retire, you will gain your annuity of ashes to ashes, dust to dust. That's how I see it. All right.
Well, the only alternative is gold and silver-related assets. And that's it. There is no other.
Well, I'll tell you one thing. There are definitely, signs on the wall that we're headed in this direction. But it may just take a little bit more pain. It may just take a few more muni bond collapses. It may just take a little bit more withdrawal of services in your community to convince you that we are not messing around here, folks, when we're telling you what's coming in your direction. One of the things that's real important for people in order to be able to address their plans and get through these coming times is to gain knowledge and information. My daughter and I were talking here recently, and she came up with a good slogan for this show. She says, ignorance is bliss and knowledge is power, to which I might add, ignorance will leave you in far worse shape than knowledge will. One of the great ways that we have to gain knowledge into what's happening on these, in this situation and these times is through a publication, Bob, that you've been writing for 21 years called The International Forecaster. Tell us a little bit about The International Forecaster, and then I have some email questions for you.
Well, first of all, The Forecaster is about business, finance, economic, social, and political issues all over the world. We publish by email on Wednesdays and Saturdays. Runs around 40 pages each time. Have a hard copy that goes out twice a month for those who are not on the Internet. And everything that you need to know every week is in that publication. You can get a free introductory copy by going to theinternationalforecaster.com. theinternationalforecaster.com. You can also go to www.intforecaster.com. intforecaster.com. If you'd like to ask a question, and we answer everyone, you can email us at Bob, B-O-B, at intforecaster.com. Bob at intforecaster.com, or you can call toll free 877-479-8178. That's 877-479-8178 and get a free introductory copy. And they also have an offering there of a free 1-year subscription, and you should look into it if you want to be a subscriber, because it's an absolutely terrific deal.
And as you all hear me say every week, the International Forecaster is special for a lot of reasons, not the least of which it's got good information in it. It's so good, and its subscriber base is so diverse and, in very connected and high places that it actually the subscribers in those high places often communicate with Bob, and so what you're really joining there is a communications and information network amongst people who are in a position to know what's going on. Don't miss it. It is an opportunity that really, at the very least, you owe it to yourself to check out the sample issue and kind of take it from there. Bob, I have a couple of questions in email here. One, hi Ralph and Bob. I enjoy and look forward to your show every Wednesday, and sometimes have to listen to it from the archives, but I always catch it. My question is, what is the meaning of shorts in the market terms? I hear it mentioned a lot, but not sure of the meaning. I know from experience that I occasionally take it in the shorts from Wall Street, but I think this has a completely different meaning. Thanks and Merry Christmas from Mike. We can talk about shorts in a lot of areas, but probably just the big picture. And I saved this question for you, Bob, because afterwards I think I may have a comment depending on how you take it. Go ahead.
Well, when you're long the market, you're betting a stock is going to go up. When you short the market, you're betting it's going to go down. And in order to short legally, you have to be able to borrow the shares that you're shorting. So if you want to short 100 shares of IBM, you have to find someone who owns the shares that will lend them to you to solidify the actuality of executing a short position. And you have to declare it as that when you make the trade. When you get to the point where you want to buy it back, let's say you bought IBM at $134 and it went to $95, and you thought, well, I don't think it's going to go any further down. What you have to do is go buy back the stock. One of the problems that the exchanges are suffering from is that there's a rule, an SEC rule, that says that you cannot short without borrowing the stock. And if you do that, it's called naked shorting and it's illegal. The problem is the SEC won't do anything about it. And that's because the trading companies and the exchanges that are shorting the stock, they are in league with the SEC.
And not
or vice versa.
And not enforcing the
and it's a big profit center for these large companies. And so the SEC is not regulating the market, it's rigging the market for the large firms. And for those of you who don't know, I was in the brokerage business on Wall Street for 28 years, and I owned my own firm for 18 years.
Mike, let's clarify one thing. Bob, when you made the comment that in order to short, you have to first borrow the shares from someone who has them, you then turn around and sell those shares in the market. So you're selling shares that you have borrowed, and that's how you create the short position. When you sell those shares, eventually you will have to buy them back, and you win if you buy them back at a lower price so that you can replenish the shares that you borrowed back to the original lender of those shares. So that's the two-step process. I hope that helps your question. Bob, we've had a lot of other questions that I'm going to sort of put together in one summation, and that is concerning the revaluation of the Iraqi dinar versus the U.S. dollar. Apparently, the country of Iraq is scheduled to come out of Chapter 7 here at some point, and some say imminently. And at the process, there would be a revaluation of the dinar up to much greater levels than it is today. Do you know anything about that, or has that crossed your desk at all?
Well, the deal's been around for 8 years. Same old story. I won't do it with my money.
Okay, well, I guess that kind of says it. There are there are some bodies of evidence that say things are imminent, but I don't know. I guess my thought on that whole process, I tend to agree with you quite simply because I'm terribly concerned that the Iraqi government still has the same corruption problems that we have in this country, and indeed we see what's happening here. My sense is that there aren't going to be a whole lot of people that aren't paid by the government to go and invest in Iraq when there is a tremendous concern about whether or not they will survive there, let alone, but that's just kind of my opinion on it. All I know is that from my years in the venture capital business, one of the primary considerations we had for any offshore placements that we did, the first thing we looked at was the stability and the honesty of the governments, and frankly, I still think that's important today. All right, moving right along, Bob, what do you anticipate for gold and silver here in the next week? We've sort of stepped into the holiday season. Perhaps people may be settling positions, but as I remember last holiday season, the movements in gold certainly didn't take any prisoners and just sort of marched along. What can we expect in terms of the situation with the currencies and their effect on the dollar as we go forward?
Well, first of all, the United States government is keeping gold from going through 400, silver through $30, and the reason why is if they know it's going to break out solidly and they can't keep it down, gold's going to $16.50. And silver's probably going to $50, or at least $40. And so that's why you have the government for the last several days trying to manipulate the market downward. And whether they're going to let up or have to let up, I don't know. But gold's going to go higher, and so I don't worry about those things. If gold sells back and you get some money, buy some shares, buy some coins, whatever. And that's the way to look at it. It's a long-term investment. It certainly is far superior to Iraqi dinars, I'll tell you that.
Well, Bob, one of the things that also comes up in chat, and I don't normally, guys, when you write in and you ask about individual stock recommendations, I try not to bring those up, just commenting that I'm certainly not a financial advisor, even though some people might think so, given what happens in the, what happens on this show. But given what we've heard about Bank of America here in the last year or two, in fact, ever since the TARP in 2008, I have a few people who have written in wanting to know what the prognosis is for Bank of America. Remember back last, I believe it was February, where we talked about your insider at the Fed, who mentioned that Bank of America was chosen to have the toxic assets sort of transferred to them and let them be the bank that fails. One of the things that I see happening there is that, as you have typically said, all of the banks are bankrupt, running multiple sets of books. But specifically, help people understand what the dynamics are of this situation, if not necessarily with Bank of America, certainly all of the banking and financial stocks.
Well, Bank of America, from what I can understand, has been chosen as a dumping ground. And they give it enough money from time to time to keep it going. And it's only a matter of time. If any big bank goes down, it'll probably be that one. And it's as simple as that.
Well, I think that, obviously the entire financial situation that we're facing in this country, I kind of touch on it and I say I keep hearing people saying that they're in financial straits, and so what they need to do is borrow more. Whether it's California, whether it's whether it's the European countries, whether it's the banks, whether it is the insurance companies or whatever, they're all borrowing. My question is, where does that money come from? I mean, ultimately, if everybody's broke and they're all in a borrowing situation, what possibility is there that anybody one day wakes up and happens to see, gee, you know, we're all broke and we're all having to borrow because the business model or the model under which we've operated does nothing but bankrupt us? I guess that, you know, the question I have is, how do you borrow when everybody is basically in debt? And this kind of goes to the story of the debt star. Any thoughts or big picture perspective on that for us?
I couldn't hear that. You faded out.
I just asked if you had any big picture perspective on that to kind of, you know, put in perspective that we're a quadrillion and a half trillion in debt, or 1.5 quadrillion in debt. Man, I can't even say that number. It's so big. I actually have to think about what that means to get it to come out right. But given that you have that kind of a debt pull on the financial system of the world, there is no way out of it, is there?
No, there isn't. Yeah, you can get out, but there's going to be pain, and it all depends on the degree of pain. And if we had bitten the bullet in 1990 to 92, then we would be in terrific shape today. If we'd done it in 2001 or 2002, the same problem would have been solved. Now it's too late. You can't solve the problem. You're looking at a minimum of 5 years of deflationary depression. A minimum. Could last 50 years. Could last 12 years. We won't know until we get there. All I can tell you is it is not going to be nice. And that's what you're facing. And that's why you should listen and do the things that we tell you to do and invest the way we tell you to invest, because we've been right. And we're going to continue to be right, because we know who is doing all this and why they're doing it. And other players in this game are trying to prognosticate what's going to happen. They've been wrong over and over again. And I've been right 98% of the time, so take heed.
Well, I think one of the things that gives you an edge on that, of course, is that you do come at it from kind of the back door in a lot of ways, and that is that you know, most of the people who try to do this investing stuff, and I'm, you know, after listening to all of the you know, reading newsletters and listening to all the pundits on TV and particularly in CNBC, it sort of occurs to me that they come at the investing market through the front door. Now, the front door is, you know, the shop is where they got all the pretty stuff that's designed to entice you in so that they can sell you something. And most people don't look past the counter inside to find out how the product that they're getting into is made, how it's created, whether or not it's legitimate, whether or not it actually stands the test of the time. You tend to come at this from the back side of the, you know, from the delivery entrance, if you will, looking at the systems that put these products in place and what underlies them. And I really do think that that perspective is incredibly helpful to people because it separates the retail investor looking at the retail shop in the investment store from, you know, being able to kind of look under the hood and see how things work a little bit. So I really want to thank you for your participation in this work. I know it's been sort of a lifelong passion for you, and you certainly couldn't do it unless it was something that, you know, you enjoyed doing all this time. And nevertheless, I think that's an incredibly beneficial perspective to bring to this sort of thing. So on behalf of everybody in the chat room and here on our Liberty and Freedom Radio Network, we all thank you very, very much. And not much else to say than that.
Well, with that, I will exit for the evening. I'll see you next week, and I'd like to thank you all for listening.
Thank you very much, Bob. Regards to Judy, and same time, same channel next week. We'll be in touch. Thank you. You are listening to The Sovereign Economist here on the Liberty and Freedom Radio Network. We'll be back for the final segment after the break.